Next up, we have Richard Hyde, founder and executive chairman, CEO of West African Resources. Richard is a geo with 25 years experience in the mining industry and 20 years experience operating in West Africa. Richard founded West African Resources in 2006, has led the company from IPO in 2010 through a $365 million debt and equity financing to see the Sanbrado gold operation into production in March this year. So please join me in welcoming Richard, Chairman and CEO of West African Resources. Thanks, mate.
Thanks everyone for coming today. Thanks to Sharon and Miles and Suzanne for putting diggers on. It's been a pretty tough year for a lot of people. But it's always good to be back in Kalgoorlie, and I'm pleased to talk to you about West African Resources and I guess the transformation that we've made in the last 12 months since I was here last. I'll be making some forward-looking statements. This announcement is lodged on the ASX, so if you need it in more detail, it's also on our website. So look, it's been a transformational period for us from 2016, from discovery to pouring first gold in March this year. And not many companies have managed to do that and stay in control, to manage costs, to build on time, on budget or under budget in our case. And really, it's because of the team that we've got. It's been a very tough year for a lot of our people. Multiple people doing long stints in isolation, long stints on site. We know even in Western Australia it's been tough for the mining industry, but have a think about some of our guys have done 5 or 6 months on site straight, and they've worked through some really, really tough times. So a big thanks to our team, who I know are watching today. So we're targeting annual production of over 200,000 ounces a year over the next 5 years. We haven't been ramping up as quickly as we'd liked, but just because of challenges getting people out of Australia. Most of our technical people are coming out of Australia for waft, for our contractors, Burncut and Parenti. Like I said, getting people out, getting them into isolation in Africa, getting them onto site, testing them, getting them back. So it gets to the point where you kind of almost need, for example, a jumbo operator, you need 3 people. You need a day shift, a night shift and someone on break. The reality has been for the last sort of 6 months, we probably need 5 people. You've got challenges getting people in and out. You've got someone almost always in isolation. Lindo's down here, just got out of the hotel, 2 weeks in isolation. So it's been really, really tough. We are growing the company. We've got over 3 million ounces in resources. We did a deal earlier this year. We added the Tooego Project, which is over 1 million ounces of NI 43-101 resources, which we'll convert to JORC this year and add it in, so it'll give us over 4 million ounces of resources. We've got just under 2 million ounces in reserves, and we'll be working towards a really big update towards the end of this year. We're back drilling again, which is where we've really created value for our shareholders over the last sort of 10 years or so. Right, so, but have a look at some of those people there. I mean, that was our first gold shipment. We wanted to make sure we did it properly. It was a good, solid effort from everyone. Just on capital structure, we have built about 20 million US in cash over the last quarter. And as the underground sort of ramps up, that's going to improve. We've got a 200 million US in debt with Taurus. We're going to look to make an early payment this year because we're building cash already. So I can read that, I can't read that. But yeah, so just over 80 million US in cash and gold. So that's gold in the room, not in circuit. Market cap is $1 billion. Pretty hard to believe from over the last 10 years. And we managed to do all this because of board management. So we had a bit of an update this year. 2 long-serving directors, Mark Connolly, Simon Storm, stepped down. we added on Stu Finlay and Libby Mounsey. We've got 2 executives, myself and Lyndon, and 4 non-executives. We've got a very, very balanced board now. Myself kind of coming from the exploration side, Lyndon really from operations. Rod Leonard has got a lot of experience, and a lot of people would know Rod from Lycopodium. Has provided a lot of experience through the build. So during the build process, we set up a technical committee, and Rod chaired that during the build. And now that we're in operations, Nigel Spicer, who's a very experienced mining engineer, he's currently chairman of our technical committee. Libby's joined the board, and she's got a lot of experience in IR, HR. She's been around mining companies for a long time, so she's our new remuneration chairperson as well. So, the board and the company, the company's grown, the board's had to grow with it. The management team as well, we've got a very solid, loyal team. We couldn't have done this without them, so we're very proud of them. So projects, we haven't really talked about the wider projects in Burkina for a while because we've been so focused on building the company. So you can see our land position in Burkina Faso. I mean, it's a country that's underlain by rocks that are just prospective for gold. So there's been, I think we're the 13th mine built in about just over 10 years in Burkina. So they've seen incredible growth in gold production to about 1 million ounces a year just for the country. We did add a smaller project to the west, which I won't talk about today, but I like it. It's situated in a classic granite greenstone contact. We'll get off some work off start of this year, and we'll do some auger drilling and some sort of early work. We've got nice rock chips over an ounce already on that one, so it's something we've got in the back pocket. I'll talk a lot about the operation today and how it's gone, and then for the first time in a long time, we'll start talking about drilling and exploration again, which I think is, where we've got to focus right now. We're seeing sort of pretty significant market caps on a lot of West African companies at the moment. We really haven't done any exploration in the Sanbrado region since about 2013, and it's something that, knowing what we know now, that you can find 1 million ounces in 150, 200 metres of strike, in a resource grade of over 20 grams, we really need to go back and have a good look at what we've already got. So just on the operation itself, it's conventional. We've tried to keep this as simple as possible. It's a combined underground open pit operation. We made the decision to go early on the underground and bring those ounces forward. We built a very conventional SABC plant with a CIL recoveries, gravity circuit as well, and currently we're meeting nameplate recoveries, in fact on a significantly lower grade feed, which is very positive. We've gone with contract underground and open pit mining, and that's working really well with Burncut and Parenti. Like I mentioned before, we've got a pretty solid resource base. It's going to improve when we bring Tooega into that. We'll convert Tooega later this year and bring it in. And we're looking to really grow that reserve now that we're back sort of creating some value through drilling. Average production over 200,000 ounces over the first 5 years, and costs sort of below $600 an ounce. And what we have done this year, because we've had a few challenges, we kind of played around. We've moved our mine schedule around. So we've opened up the M5 North Pit early. That's higher oxide, lower grade, lower strip ratio, higher oxide component. So we've actually filled the ROM pad over the wet season. I think we've got about 800,000 tonnes at just over 1 gram sitting there now. And we're blending through the underground material as it comes through. So to give you an idea of Q3, so these are our numbers that I think a lot of people have been waiting for. We've had a really good build on the previous quarter, so this is our second full quarter of production. So nearly 900,000 tonnes processed at 1.7 grams, and that's broken down to predominantly open pit feed at 1.5 grams, and about 22,000 tonnes of underground at 10.5 grams. So most of that's development ore. We did manage to get some stoping ore into the mix late in September. We'll see that improve through Q4 now that we've broken the first stope, and we'll be feeding. Hopefully we'll be able to double our underground tonnes in the next quarter, and then It'll improve through Q1 next year into sort of Q2 next year, where we're looking to sort of ramp up and pull out sort of 1,000 tonnes a day. And that's when we'll really see the ounces picking up. And because it's a bottom-up mining operation, we've got to get the development in so we can get the levels developed so we can drop the stopes. So we poured 45,000 ounces for the quarter, which is about a 40% increase from Q2, which is good. So we're showing really good progress. Again, just the challenges around mounting the underground operation is where we're seeing our pinch point at the moment. And we've been in discussions with Burncut, and we're looking to increase increase Burncut's presence over the next few quarters while we're sort of still dealing with these challenges around international travel. And look, we can continue to expect growth through Q4 into next year. So we drilled enough to build the project and to fund the project in 2018, and we haven't been drilling since then. The last hole we drilled was TAN 18 DD 228, and I think it was 25 metres at 15 grams, so it was a good hole. And I thought it's a good time to put the glasses down, go and raise the money, and just in case nothing else is there. I'm always a bit of a sceptical exploration geologist. But so far we've managed to hit 32 at 5, half a metre, which closed out mineralisation on the southern side. DD 235, which is the deepest hole we've drilled so far, that was an intercept at 1,200 metres down hole. It was a bit unusual. It was deeper than we thought. We saw some changes in geology up the hole. We went back and re-logged and re-assayed that after the announcement that went out a couple of weeks ago, and it's come back at 7 metres at 20 grams. The original assay was about 7 metres at 8, and some very coarse, sort of good-looking gold there. 15 at 20, we've got a couple of holes still in progress. DD 238, which is on the north-western side, has hit mineralisation, but we're waiting on assays. So clearly the system's really, really strong. It's open. I'll talk about production profile on the next slide, but I think you can see that there's much more than 6 years mine life here. It's unusual to get more than 6 years mine life on any underground mine, and what we're working to do here is to really build 10 years of reserves plus inventory. So our production profile for Sanbrado, now this doesn't include obviously our increased throughput. So what we're seeing at the moment is the plant's overachieving. It's doing much more than the nameplate 2.2 million tonnes per annum. We don't have the new drilling in this. We don't have Tooega in it, but you can see the first 4 or 5 years, which is what we banked the project on, a really high production. We've moved the mine schedule around, so we have mined lower grade ounces earlier, and we've processed low grade stockpiles earlier than expected. So we haven't seen as much of the high grade that we would have expected from the study, but going from a feasibility study to real life is a bit different. So we'll see those ounces coming into the profile next year, early next year, which I'm really positive about 2021, and I think we're going to have a really good shake at 300,000 ounces. And there's something we haven't done for a while. I wanted to talk about getting back to exploration and getting back to drilling, and the original land package that we listed the company with back in 2010, and what's left of it. So we've explored it, we've dropped some of it. We've got a number of targets all within about 50 k's of the Marcoy fault zone in Burkina Faso. It hosts 40 to 50 million ounces from the north of Burkina to the south of Burkina. We're slowly consolidating here. We've added another permit, V3, you can just see to the west of Manesi. We've added Tooega. There's some really nice looking targets in Tooega, not just Tooega itself, that we're really excited about. And that's all within a trackable sort of distance of our new plant that we just built. So it's something we're going to hit hard over the next 12 months. We've got an aggressive exploration program, so we've got the drills turning again. 25,000 metres of RC and diamond drilling. We're getting back and doing some auger work, so 30,000 metres of auger. We've got a budget, and the Tooega feasibility study, so we've got a budget of about $7.5 million US just for the Sanbrado regional area. So this brings me on to talk about Tooega, excuse me. It's tracking distance to Sanbrado. 1 million ounces at 2 grams, and we got this deal done during COVID, which we just got back from our first gold pour, and we were hoping to get this deal done for Indaba, but it didn't work out. And so B2's done a lot of good work on Tooega, and we're really pleased to have that in the stable, and we're working pretty hard on that already to bring it up to JORC first, and we'll wrap some reserves around it next year. But we are expecting to really increase the production profile and mine life at Sanbrado with Tooega. And what you'll see in a couple of slides is just some fantastic big slabs of proper mineralisation, talking 40, 50, 100 metres of mineralisation at sort of 2+ grams. It's fantastic. So it's going to be a beautiful project to mine. The exploration upside on it as well. You can see Tooega there in the sort of central west part of the permit. It's about 600 or 800 metres long at probably half a gram in auger. And then it kind of peters out. So it's quite an interesting target. And then you can see V10 to the south, which has had some light drilling across it. Tooego, which geologically looks very similar to what we see at M1 and M5. And so we're only really just kind of getting our head around this now that we've got the project. We only really had a good look at Tooega, the resource, when we actually did the deal. So we're very pleased to see some of this upside. And you're seeing kilometre scale anomalism at Tooego, which I think we'll have a good crack at with some more auger and more drilling next year. And talking about Tooega itself, it's a big blob of mineralisation, which it starts off near surface, pretty thin. It blows out at about 40 or 50 vertical metres, and it plunges off to the north. And it's still going. It's very lightly drilled at depth. I mean, B2, if you've been following the former Papillon story, Fecola's just turned into a monster. They've found more gold around it. So clearly their attention was in Mali, not in Burkina. And that's really allowed us, and through our good relations with B2, we've managed to do a good deal for WAF shareholders, and also it's a good deal for B2 because the project's been moved on, and we're doing the right thing by the stakeholders in Burkina. But you have a look around this plan, you can see some of the grades that you see: 99 at 2.6, 25 at 3, 144 at 1.7, and these are just capturing all the mineralisation within the wireframes that are mineralised, including waste. 90 at 2, right at the end, probably outside the resource, is the way that pit comes up. 48 at 4, so there's some fantastic, really big zones of mineralisation here. It's got really good recovery characteristics. Conventional CIL recoveries of 86%. It's only had about 37,000 metres of drilling in it, so it's still lightly drilled, I think. We've done a lot more drilling at Sanbrado. We've already started working on it. We'll start drilling on it in the next sort of month or so, and we'll get the geotech drilling done and the met drilling done early, so we can get that back to Perth and start doing some test work and build that into the feasibility study. And you can expect a JORC update on that in December as well. So in a long section, which is, again, looks fantastic. So you can see that hit, which is 12 metres at 5 outside the resource. There's a bunch of mineralisation which you can see it's pushing off at depth. That pit's run at, I think, 1,400 US gold, so it captures 1 million ounces at 2 grams. So it's really, it's a very, very solid deposit, and we're very pleased to have it in the stable. Now, all the good work we're doing in Burkina, you can't do it without a licence to operate, and we believe we've got that. We are working really hard on aligning ourselves with, good practice internationally. We're upgrading all of our work at the moment. It's a continual process, and I think it's, even though we raised our debt with the private equity fund with Taurus, the requirements are the same no matter who you go to for debt these days. So we're doing all our work to a very high standard. We've got very happy stakeholders. We've built nearly 300 homes. We've resettled about 700 people. Because it's different in Africa, you're living and working with the people that you're resettling. So, you find out pretty quickly if things haven't gone to plan or they're not happy, but we're actually working really closely with our stakeholders. And we're starting to see the benefits. So there's more detail. I put a press release out last week, and it's got more detail on our E&S commitments and what we're doing in Burkina. But we are making a difference there. Burkina is a developing country. It's probably one of the 4 or 5 lowest developing countries on that scale, and when we're talking about, removing arsenic from groundwater, these people have been drinking arsenic-loaded groundwater for a long time, and all the places where we've resettled people, we've either piped in fresh water or we've built units that extract arsenic. So, we're making a big difference. And we're doing it with a pretty small expat population, staff. So we've got the majority of our workforce is from Burkina. Right, so what you should look out for with West African, obviously we're still ramping up to full production. Q4 is going to be much better than Q3, and then Q1 next year will be better than Q4 this year. So we're going to keep building. We've ticked a lot of boxes already. We've just got our first bit of stoping ore into the schedule towards the end of Q3 in September, and that was challenging. But that's working a lot better now, and as we're increasing our manning levels for the underground, I think we'll smooth a lot of those issues that we've had in the last 6 months. Back to exploration, so expect some more exploration updates throughout the next 12 months. A big update with the resources, reserves and life of mine production, and providing we don't have any sort of significant issues further with COVID, we'll have guidance for 2021. We're going to get stuck into Tooega, really keen to get that into JORC resource and into reserve, and we are building cash already. We've just built another $20 million US in the last quarter, and we're not even, we haven't even hit our straps yet. So we are going to make an early debt repayment and start paying down debt with Taurus. It's going to be a focus for us. So hopefully you'll look around here, and obviously people who are watching this on live stream, why you should be a waft shareholder. And we were talking about this yesterday, and really the team. We've put a really quality team together over the last 4 or 5 years. We actually care a lot. We're all shareholders. We're invested in this. We've managed to do what a lot of companies haven't, which is build a project on time, on budget, and it's working. So we don't have any technical issues at the moment. It's just manning issues, which we're resolving. We're always upgrading our ESG, so we're implementing best good practice standards, international good practice. So and obviously mindful of our relationship with our stakeholders and our licence to operate. Gold exposure. So something I haven't really talked about is we're unhedged. We're fully unhedged, and we've got full upside to the gold price. And plus 200,000 ounce production going forward, and I can see this being a plus 200,000 ounce story for plus 10 years. Once we get all our drilling done. So there aren't very many single asset companies with those sort of credentials. And growth. So we're ramping up to full production. We're drilling aggressively. Expect that resource reserve update. And one of the key things here is that we've kept our team together. So, B2 Gold is a company I admire. They've built 4 or 5 projects from scratch. There's other companies, in Australia like Equigold and Regis who have built projects from scratch. And the benefit of that is you end up with a brand new plant at the end of every project. And I'd rather have a stable of new plants that all operate well than a bunch of projects that have got different mills and different sort of engines and what have you. So, look, we've kept the project together, the team together. We are keen to build more projects, but we've got to find the projects that are right for us. We're not going to overpay. We're not going to put our balance sheet at risk. We're not going to go and do projects because we think we have to do one. We've already tucked in our growth project with Tooega. We're going to maximise the value out of the assets we've already got. And we're going to keep growing through 21. Thanks very much for your time, and I'm happy to take any questions.
If there's nothing from the floor, one quick question, Rich. So what have been the key issues and challenges in terms of ramping up and commissioning the mine?
Yeah, like I touched on, Digby, look, we've got a number of our expat staff, and also, I think, Parenti and Burncut as well have had a number of their expatriate staff travelling from Africa back to Australia. At the start of COVID, we were isolating guys in country for 2 weeks. We were isolating in Australia for 2 weeks. We had people doing extended stints on site. We've had to manage fatigue. We've had to manage mental health. When people have no prospect of leaving site, like some of our people, they might be Australians, but they've based themselves in Europe. They couldn't get back into Europe to where they're actually living because they haven't got citizenship. We've got one chap from Kenya. He couldn't get back in home because they closed the borders. So it's really challenging, but no, we've got a very resilient team. So I think that's the word, resilience. Yeah.
All right, well done. Thanks very much,
very
Richard.